In 2023, we've been plagued with a 5% interest rate hike from the Fed over the last year, a massive rise in mortgage rates doubling to over 6%, the biggest wave of bank failures since the global financial crisis, and a months-long partisan standoff over raising the debt ceiling. Now, aside from all of that, the US economy and financial markets have somehow eked out and survived a massive crash that everyone was preparing for. Now, is this a miracle or just prolonged pain that hasn't come yet? But today we're covering extremely bearish predictions from Morgan Stanley strategists that could show a downturn finally coming in the S&P 500, how Binance could be in some real trouble from the SEC, and what huge oil cuts from Saudi Arabia could mean for the market. Now, the first thing that we have is that we have some Morgan Stanley strategists expecting a 16% shock to the actual S&P 500, meaning that by the end of the year, they predict that there's going to be more downside coming, and this comes off a little bit more of a bearish stance according to many other strategists and analysts in the markets. Now, this idea basically comes from a mix of deteriorating liquidity coming out of the markets, basically from our global financial crisis where the banks were failing, and then mix that with the debt ceiling. There's going to be somewhat of a credit crunch in the markets, making it harder for businesses and companies and basically the whole US economy to get money. And then pair that with future earnings per share in the S&P 500 to fall, or at least that's what these analysts predict. That's why they believe there could be a 10 to 15% drop in the stock market, which could affect the entire market as well. And if we take a deeper look into the S&P 500, currently we're sitting at 4,200, which is quite a critical level. If we take a look back over to the left, right around here, this is actually the same point when we actually started to see rate hikes just about a year ago, at the same time when the Fed started raising them. Now, speed over 12 months and we're sitting back at that 4,200 mark. Now, what they're saying is that we could see a drop to 3,900, which at this point means that we could see a potential drop of around 8 to 9% in the S&P 500. Now, a huge reason as to why we probably will see something like that is because if we jump over to NVIDIA, or if we just take a look back, if you watched my last video, you'll remember that if we take the top 5 stocks in the S&P 500, they're the ones that are carrying the entire markets. Things like Apple, Microsoft, NVIDIA, Google, and Amazon. All of those stocks are absolutely pushing the market to the upside. If you take those 5 away, the S&P 500 is actually flatline for the year. Now, since the start of the year, right around here, let's take a look. So right around this point, the S&P 500 has been up 12%. Again, if you take those 5 stocks away, the major movers, the big tech companies, then really we haven't seen any gains. And if you take a look at NVIDIA, which has had this insane AI craze, we've just hit an all-time high, meaning the odds of this continuing to move up are slight. You're going to have more bearish people, a lot more short sellers, and that's going to have a lot of downward pressure pushing in for NVIDIA. If we take another look at Apple, another one of the stocks that's pushing up the entire stock market, it recently also just broke its all-time highs, topping out today at 184. So when you take a look at this, you're having a lot of these tech companies that are carrying the entire market, hitting these all-time highs. And again, now you have a lot of bearish sentiment around the markets where we have this prolonged pain starting to creep up. It kind of begs the question, are we about to see somewhat of a downturn happen? Now, to make matters worse, not just in the normal stock market, but now we move over to the crypto market where Gary Gensler and the SEC, obviously for the past several months, they've been on a craze of saying everything is an SEC or everything is a security. And they've basically been suing anybody and everybody they can, just for whatever political background reason that they can. But basically, they've served Binance with mishandling customer funds, misleading investors, and wash trading. They've also served them a 136-page document basically covering all this. And the argument that Binance makes, which I think almost everybody involved in crypto can agree with, is that the SEC just sucks with making the rules clear. They've made the waters murky on purpose for whatever reason, but they've also made it very difficult for a lot of these crypto companies, a lot of these crypto exchanges to operate within the United States, and that's kind of pushing them out of the US. And this also comes alongside with Hong Kong basically saying we will take all of those crypto companies and we will advance the space. And so that's really pushing adoption away from the US, which in the future could be a very bad thing. Now, if we take a look at Bitcoin and how its price was affected by this, obviously it's not a massive thing. We've seen, the effects of this type of stuff kind of happen, and these aren't the catalysts that are going to destroy Bitcoin's price in the short term. Obviously, we know long-term Bitcoin will survive, but getting the best price on Bitcoin and understanding where the price movement is going is very important in terms of getting the most return on your money. Now, obviously, over the last couple days, this news isn't good, so it's going to push Bitcoin down. And I think from when the news really came out, I mean, we've seen Bitcoin drop around 5 to 10% roughly over the last 2 days. Now, when we talk about what could be happening, I mean, if we take a look over here and see what kind of price action we've had, we can see that over in this area, we're starting to see the same thing happen over here where we kind of had this consolidation, right? Price moved up in price, and then we kind of consolidated. And then again, with the whole FTX thing happening in November, that's when we had our largest drop down to here at the lows of around 16,000. And then since then, we've only had upside potential at these lows when tons of people accumulated and bought Bitcoin at a premium discount. And then obviously over here, this is the SVB bank failure, which had a massive day in Bitcoin's price. But now we're kind of back to here where we're consolidating. We're going to continue to move lower and lower and lower until what I feel like will happen is we'll get one more catalyst to the downside. And how low we can go really depends on a lot of factors, but I feel like we could fall back into this range of around 22,000 and possibly even back to 18,000. But those are just my personal predictions. And the last thing that I want to cover that I think is really important for us to understand that maybe not directly correlate with the markets as of right now, but it's important to understand is the OPEC Plus supply cuts. There have been 3 massive cuts in barrels produced per day. Now, in October 5th, there were around 2 million barrels. April 2nd, there were about 1 million. And then June 4th, literally yesterday, there were over 1 million barrels cut per day in total production. Now, what they're saying is the price continues to fall. And so Saudi Arabia wants to stabilize these prices because what they actually want is to at least keep prices right around here at the $80 per barrel mark. But ever since they've been cutting supplies, it actually hasn't been helping them, and the price has continued to drop. And so if this continues to happen for them and price continues to fall, then what we could see as a reaction is Saudi Arabia to continue to cut supply, because as you cut supply, eventually demand will catch up and that should shoot up the price. But if it continues to fall, we could see some headwinds and then eventually maybe see some rise in gas prices and anything else that uses oil. But again, in the future, this could have some implications on the markets, especially if this is something that's starting to build pressure over time. But that's everything I have for this video. It's definitely very important to understand where we are in the markets, what's happening, especially the things behind the scenes, things that could be building up in pressure. And then we finally get some of those catalysts to pop off. And that's when we could see a lot of these market downturns. But until the next video, I'll see you guys then. Peace.